Ta-da. All right.
We're here.
Doors are open. We'll let everybody get in there. We got some great content today, some awesome questions. Super excited. So, fabulous sponsor, Lori Rocks. Sorry. So it's all good. Exactly. Exactly. And I was hoping it would stay cloudy, not because of you guys, because I wouldn't have to deal with this. But fortunately, the sun's kind of on the building. It's really bad in the morning. Like you can't even see me, and there's no shades. If you guys could see, there's no shades up there. There's no way to make this darker.
You are inside. It totally looks like you're outside.
It would if I was like this, right? Like totally just sitting outside on a patio or something.
Yeah.
So there you go. That's actually Salt Creek back there. I said I could just put it with that kind of background, but be awkward where I'm sitting. So. Uh-oh, we lost our host. Where did Ryan go? Last second, he probably had to go to the restroom. Uh-oh. 12 o'clock. Uh-oh. We're getting there. People are loading in. We'll give everybody a minute. Let them get their Jimmy John settled. Thank you, Lori. You're the best. Unsweetened. Iced tea. Wonderful. Ah. Did you get some for yourself, Lori?
I did not. You're welcome. You know what? I'm trying not to eat bread. I love bread, but I'm trying not to eat it. So
wait. They have a wrap. Look.
I know. Oh, did you get a lettuce wrap?
No, there's actually some sort of shell on there. It's like a spinach shell or something like that. There's actually some sort of tortilla shell on there.
Yeah.
So I don't like the lettuce wraps. Especially, I used to get the Vito with the lettuce wrap. All right, nobody wants to hear this. Let's hear about my Jimmy John's preferences. So we will get rocking and rolling here, guys. Welcome. You guys are here at our tax class and real estate tax class. Ryan and I have done this. I think this is our third straight year, Ryan. Third or fourth? Third at least.
Definitely third, maybe fourth.
Yeah,
Ooh.
third year. So we've done this a while, but we've got a whole format change that we're really excited about. Ryan and I, we've been changing the formats for some of the classes, so that's good. But we need to get to the good stuff first, which is the food. The food was sponsored by Lori Amato, good friend and even better home warranty specialist for the last 17 years. Lori, thank you for the sandwiches. I'm going to turn it over to you to introduce yourself and Choice Home and let us know how you can help our agents that are here.
All right. Yes, you are very welcome. So as Rich said, Lori Amato, Choice Home Warranty, been in the business 17 years, and I am here for you and your clients. So if you don't have my cell phone in your cell phone, make sure you save it after today, because I answer my phone. And I'm here to help you, and I'm here to help your clients. If you want to give your clients my cell phone number, please feel free. I talk to clients all the time, and I'm happy to answer their questions and help them. So we have free sellers coverage. So sellers coverage kind of went away for a while and got forgotten about, but believe me, you guys, it is back. I am ordering sellers coverage left and right. Especially because buyers are being a little bit more critical of the houses they're buying these days, even though we're still dealing with inventory issues. You know, if systems and appliances are 20, 30, 40 years old, the buyers are asking for concessions for those and price reduction. Have your seller offer a home warranty to alleviate those fears for the buyers. And we have a 5-year warranty. I have several 5-year warranties being ordered because it gives the buyer more peace of mind than just a 1-year warranty. So I had an agent call me and say, Lori, we have a buyer that's walking away from the deal because the furnace and AC are working, but they're 30 years old. What can I do? And I said, 5-year warranty. He's like, what a great idea. Offered it to the buyer instead of doing a price reduction or a seller concession, which is much more cost than our $2,400 5-year warranty. They offered the buyer the 2,400 5-year warranty and they ended up closing. So keep that in mind. If the seller is not offering the warranty for your buyers, the buyers can buy it for themselves and make monthly payments with us. They do not have to pay in full at closing. So we know that a lot of buyers right now are putting all their money down to get the house. So that's why we offer monthly payments for the buyers. So as I mentioned, we have a 1-year, 2-year, 3-year, 5-year. We have a military responder discount. The buyer can rekey up to 6 locks in the home for only our $75 service fee. And don't order online unless you know that you're on our realtor portal. And the reason you'll know that is when you have to go and sign in, you have to sign in with your email. And you'll see a picture of me on the page. If you don't see that, you are on our consumer website, and our consumer plan has less coverage, higher service fee, and a 30-day wait. You do not want that. So either make sure you're on the realtor portal, or just send the information to me, call me, text me, email me. I am happy to order for you. And you guys, I was happy to buy lunch for you today, but please send me some business. It helps me, sponsor more events like this for you. So your next seller or buyer warranty, if you could send it my way, I would really appreciate it.
So Lori, we do have a question that came in, and it's
Yes.
from Mari Van Meter. Mari wanted to also, she's going to be reaching out to you for a warranty. So definitely might have gotten a policy, but she did ask, are agents able to purchase it for buyers with payments? Can the agent make payments, I guess?
I no, because you don't really want us to keep a credit card on file for you as the realtor, because if somebody makes monthly payments with us after that first year or whatever, 2-year, whatever the term is, we just keep charging it. So if you're paying for it as a realtor, I highly recommend that you pay for it in full.
Okay. Okay, good. All right. Reach out to Mari too, as far as that's concerned. If you don't have her contact information, we've got it. So any other questions? Oh, wait, I've got one. Becky Texan. How much are those warranties?
So we have 3 plans. Our top plan is 660. Our middle plan is 580. And then the bottom plan is 450. And that's for single family home. And condo townhouse is a little bit less. But I'm going to email all of you guys after this a copy of our brochure that has all the pricing, the different plans, all of that information. But, please feel free to reach out to me as well.
Perfect. Perfect. Thank you, Lori. Thanks for everything. Thanks for your partnership, your sponsorship, and your friendship.
You're welcome.
As we will now roll on to Ryan Shafkis from the law offices of Ryan Shafkis. Ryan started his own firm. We were just talking about this in 2016. And Ryan, tell me what was going on in your life in 2016 when you decided to start your own law firm.
Well, nothing much. I was, recently married and have a wife who was about 7 months pregnant, and then the firm I was at disappeared very suddenly, and then we decided to unexpectedly hit the ground running, and we did, and that was 7.5, almost 8 years ago now. So things have gone pretty well since.
That's good. One of the reasons that Ryan's going to be a great resource for you, and he's a great resource for me, is he covers all the counties here in the Chicagoland area, commercial and residential. And in the past, we've actually had PowerPoint presentations that we've gone to, but really what we're going to do is a Q&A. So not only will we take your questions as you guys feed them through the chat, we've got over 20 questions that were pre-sent to us when you guys registered. And Ryan, do you want to say anything else about you and your firm before I start peppering you?
I'll give just a quick little brief. Like he said, I work on any property, really, commercial, residential, industrial, office, condo, like whole building, individual, vacant land. And I have clients in like 16 counties right now. And I will happily look at any county in Illinois. And yeah, so I'm happy. I love this format too, because questions are are very, just let me help you answer exactly what you want to know. So throw them in the chat if you haven't already sent them to Rich and Tony. Otherwise,
Perfect.
let's do it.
All right, let's do this. All right, Christine Bowers got our first question of the day. When she, and this is a great question, Ryan and I talked about this one earlier, but when can you ask for 110% or more for prorated taxes on a contract instead of the, I'll call it standard 105% prorations?
It's a great question to start us out because it addresses a couple points. The clearest answer is during a reassessment year. And by that, I mean anytime the property's been reassessed and that hasn't been reflected in a tax bill yet. So currently, the city of Chicago for 2024 is being reassessed. None of that will be reflected in an actual tax bill until August 2025. And so, right now, if you know a property is going to be reassessed and you don't know what it's going to be assessed at, like most of Chicago hasn't actually been reassessed yet, it's a good idea to just look at what the purchase price is compared to where the current assessment is and say, oh, is there a really big discrepancy? Maybe we want to push for 110 or 120, and we can get into calculations and some of these other questions. But that's really a good starting point. Otherwise, look at if the assessment's been published, like West Chicago Township has been published, then I think one other. But you can look at what the assessment is. Was it a 10% increase? Maybe 105% is fine. Was it a 90% increase? 105% is probably not going to cut it. And that's really important to just really look at what information is available and kind of adapt as you can. That was Cook County. For the collar counties, it's really take a look at if there was a reassessment, and the collar counties are really easy because they all were reassessed last year and all those are tax bills are already out. So you're kind of out of the weeds with that one at this point. The next reassessment for all the other counties in Illinois isn't until 2027 again. um, they do apply annual equalization factors to those counties, but that's done to everyone. So you might see an 8% increase, but everyone got that same 8% increase. So the taxes, the 105% is usually still good there. So really, whenever there is a pending reassessment or there has been a reassessment that hasn't been reflected in that most recent tax bill, that's the time to really consider your options for more than 105%.
Perfect. Thank you, Ryan. All right. Jennifer Brooks asks, now we to talk about being very specific. We love this. Why are property taxes so high in Park Forest?
And so this question, I love it. Unfortunately, the answer is going to be wild, and I'll try to keep it concise. But Park Forest is in Rich Township. Rich Township has some interesting issues. I don't have any clients in Park Forest. It's not a huge area. And the reason it's complicated is the way we use property taxes. Property taxes are highly local. So you fund your school district, and your school district typically takes between 60 and 90% of your property tax bill. It's almost all just going to the school. That's how we fund our schools. And the the school district taxes those who funnel to it. So they have a levy on those and on those areas, and those areas funnels kids to them, and that's how they get paid. Unfortunately, some areas just don't have a lot of property value to pull from. And so it takes the budget of the school, which whatever, millions, billions, however big the school district is, and they divide that over the assessed value of their taxing area. And unfortunately, in an area like Park Forest, the taxing value just isn't as high. There aren't as many significant commercial buildings to help absorb that. The homes, there aren't neighborhoods with, $1 million homes as much. And so it is a lot of more entry level modest houses, and those homes have a lower value, and it ends up increasing the tax rate. The tax rate in Park Forest, when I looked yesterday or earlier today, was between 30 and 50%. So that's where you take the assessed value, equalization factor, tax rate. That's how you get your bills. It's an insanely high percent. Other areas, like the city of Chicago has tax rates between usually like 6.5, 7.5%. And
Wow.
then compare that to literally 45, 48%. And that's just what happens. You can have a $150,000 house in Chicago that has a tax bill of $2,500, and you can have a $150,000 house in Park Forest that has a $9,000 tax bill.
Whew.
And it's just
Yeah,
unfortunately kind of the way things are
sure,
calculated and happen.
sure. All right. Hopefully that answers Jen's question. Dorina asks, why my monthly mortgage payments increased significantly after the second tax installment?
I love this question because it really helps explain things in Cook County. Cook County is It takes a while for them to get tax bills out. In fact, tax bills were published in Cook County. If you're curious, or if you have deals going that might have been reassessed last year in the south and southwest suburbs, those tax bills are now available online as of yesterday. 2023 second installments came out, were published yesterday. So everyone note that. Um, but Cook County only issues a tax bill once a year. The first installment tax bill in Cook County is a calculation. It has nothing to do with what the total tax bill will be. And that calculation is 55% for the first installment of whatever last year's bill was. Regardless of what the assessment or taxes are going to be the following year, it's always 55%. Now, the reason you see huge increases after the second installment is because that's where the actual calculation happens. When I looked at that Park Forest property, Park Forest was reassessed in 2023, which tax bills came out yesterday. That Park Forest property, the tax bill went from 4,500 to 8,600, and
Wow.
so all of that is reflected in that second installment because when you have a $4,500 tax bill, um, your first installment bill is going to be 2,500, give or take. But then if you have an $8,500 total tax bill, your second installment is $6,000. It all shows up there, so your lender only sees it after that second installment is paid, and then they're like, "Whoa!" They pay that bill, and then the other thing is, whenever a lender sees a huge increase, it compounds because they've already paid that bill, and they have to make you pay it back, and they usually spread that over 12 months. And then on top of that, your lender says, well, not only do you have to pay us back for this money we just shelled out, we also have to start withholding more going forward. And it kind of doubles up how much they're going to be holding back. So a $5,000 increase amounts to closer to like $1,000 a month because you have to pay back and start prepping for going forward.
Yeah, that's a little rough, but yeah, we've definitely seen that. And most of with cross country servicing the majority of our loans, people can come back to us and have questions, and we kind of work them through some of that escrow process. At least it's somebody else there to help besides whoever's on the back end of the servicing. All right, Patty Demars asks, why are taxes so low in some states, like in the South, and so high in other states? So now we're getting you to opine about what's going on around the country right now, Ryan.
So that's a very obviously different question, unique question. It has a little to do with actually, obviously what we do. The taxes in Illinois, we fund our schools locally. There is very little money given out by the state of Illinois for local school districts compared as a proportion of their budget. There are some states that will collect other taxes. Um, there are states that have natural resources or other ways they can collect money from businesses or other ways they can have income to do that, and there are just some states that are currently suffering teacher shortages because they don't pay them much. There are a lot of factors in this, and I'm none of those anything that I just said is all pieces of it. There's so many things here that impact that, but um really it's we in Illinois, we tax hyper locally for our schools, and it can in some cases really cause it to be extraordinarily high. And I will also say there are areas in Illinois that are extraordinarily low, and it's kind of polarized. And again, that's just how things unfortunately are. I don't know, like the assessment processes are also wildly different in other states. California only assesses a property when it is transferred, and that's it.
Oh,
They will only assess it when and it stays there until it's sold again. And so you can have properties for 50 years sitting there. Someone's owned it and they bought it for 300,000 and now it's worth, 9 million and they're being taxed on a $300,000 parcel. That doesn't
ooh,
happen in Illinois. In Illinois, the assessors are all forced to revalue every property on a schedule.
okay. Excellent explanation. All right. This is a good one considering this is what you do. Lourdes Hernandez asks how to appeal taxes when they're too high.
That's a great question. And obviously, the answer is hire me or appeal them yourself. Or,
There you
I
go.
mean, reality, appeal them yourself, hire someone to do it, but be diligent and persistent. Appealing taxes is not a, "Oh, I did it once, we're good to go." It can be, but in most instances, um, the way to appeal, find out when it's open, and then appeal. And if you mean like how, as in the nitty gritty, there's two different ways to appeal. You can appeal via market, or you can appeal via equity, and that's the fairness of similar homes in your neighborhood. And
Ryan, can we back up 1 second? Because
sure,
you said find out when it's open. So there's a certain, and to be specific, there's a certain window when you can appeal, correct?
there is a 30-day appeal window, 2 to 3 times a year, based on, again, county and all sorts of stuff that you can appeal. And you can only appeal during those windows. Now, someone else later on is asked specifically when to appeal, and that question is unfortunately hilariously wildly complex because there's no answer. It literally varies year to year. Um, and that's something where if you're doing it yourself, you just kind of have to check websites constantly. Um, I, there are general things. Most of the time, the assessor appeals during the summer. The board of review opens up, and this is Cook County. The board of review opens up later in the year, somewhat times, usually August through January, February. That's the typical time frame. But you have a specific 30-day window based on your township. And if you're in Cook County, I can just pop this into the chat real fast. Let me see. Send to everyone. That is the Cook County calendar of deadlines. So you can see there what's currently open, what's already passed, and what will be open soon. But that's just for the Cook County assessor. There's a separate website for the board of review, and there's a separate website for every other county. Um, and so yeah, that's kind of how when to appeal and how to appeal. That's a really long answer. That one question could be a 2-hour class, and we would barely scratch the surface. So but the basics are, if you're a homeowner, and this is for single family, if you have a commercial property, go to an attorney. That's kind of the answer there. Um, but realistically, if you have a home and you want to appeal on your own, if you're not going to go to attorney, go to your local township assessor. They are there to help you, and they are happy to help you. And they'll pull the comps for you. They'll explain the process. That's the best advice I can give anyone who has the time and wants to do it on their own. Go to your local township assessor. And typically, and when I say township, I don't go to downtown Cook County. Go to find out what your township is and go to that township's office. By and large, the people in those offices are amazing and they want to help their homeowners.
Yeah, I've heard some great things, great feedback from some people that they were super helpful once they walked in. They kind of helped them walk through the whole thing. So that's great advice, and hopefully we've just saved a ton of people a ton of money. All right, we do have something that popped in on the Q&A. Okay, so Ryan, Regina Ruda asked, "Hey Regina, I noticed my client isn't receiving the homeowner's exemption for 21 through 23. I am in the process of helping them with the application. Would they receive a refund? House was purchased in 2020." Now, Regina, I know is in her office is in the Chicago northwest side or north side of Chicago. So let's assume for the answer purposes, Ryan, that this is Cook County.
Great. Thank you for that assumption as well. In Cook County, yes, you can have that question, or sorry, that exemption. Um, you file what's called a certificate of error. Thanks, Regina. She just clarified it is Cook County.
So
Um, so you basically file a certificate of error online. Now, I don't think, unless they've changed it, that the 2023 certificate of errors are available yet. But yes, they will receive a refund. If they purchased in 2020 and moved in 2020, they are eligible for the 21, 22, and 23 homeowners exemptions as long as they owned no other properties and didn't have any other exemptions in anywhere. And that includes other states as well. But yes, they do get a refund. You submit the certificate of error, they will approve or deny it. After they do that, the check usually arrives within 6 to 8 weeks, and it includes interest. So they will cut you checks. I've had clients get several $1,000s over the years get sent back to them. So yeah, that is a great thing to do, even for, like, it's the best thing to do for sellers because they get money, and it helps the buyer see that the taxes are going to drop when that exemption gets applied.
Great job, Regina, helping out your client too. All right. Amico Pope asks, please explain how the assessed value affects the property tax. How and when are assessed values calculated?
I'll answer the second part first, because that's a great question. Assessed values are calculated once every reassessment period. And in Cook County, that's once every 3 years. And the cycle goes 24, City of Chicago, 25 will be the north and northwest suburbs, and then 26 will be the south and southwest suburbs again. Every 3 years, that cycle just repeats. And the assessor calculates the assessed value of the property and issues a new assessment for all the properties in that chunk of the Cook County once every 3 years. And so that's how often and when. It's, again, you saw that deadlines thing, that link I pasted. It's a process that takes time, and it varies every single year. And now how the assessed value affects the property tax is really a good question, because it's the basis of the tax bill. Your tax bill is a math problem. It says assessed value multiplied by equalization factor to become equalized assessed value. Then you subtract out your exemptions and multiply it by the tax rate. So the assessed value is the top of that math problem. The lower that number is, the lower your tax bill will be. And that's kind of how it relates. And the other thing I'll say is, when reassessments happen, it's really important to look at how your assessment compares to your neighborhood as far as terms of increases or decreases. Because if you get a 90% increase, that's terrifying. But if the entire township saw a 90% increase, it's less terrifying, because if everybody's taxes went up, or everyone's assessment went up, that means that, again, the tax bill, the school district's bill, is going to be distributed along, similarly to as it was before. The real problem is when you see an increase in your assessed value that is much higher than your neighborhood. And then you can see significant changes in your tax bill at that point. But assessed value is the basis of that tax bill, and that's how it goes.
So Brett McIntyre followed that up with a very similar question. I think we knocked that out with that answer from Amika. But Brett did say, when will today's high sales prices factor into your tax bill?
Love that question. So, um, assessors value properties, and I think I said in Cook, it's once every 3 years. The Collar County I mentioned earlier is once every 4 years. 2023 was a reassessment, and 2024 is the next one. But when they assess properties in Cook County, they're doing a 3 year look back. And assessments are based on the January 1st of the calendar year. So when you're looking at assessors' value, they are considering, if they're valuing for 2024, they're looking for a January 1st, 2024 valuation, which means they're going to look back on the prior 3 years, 2023, 2022, 2021. So that's what they're going to consider when they make these numbers. Now, those numbers do factor into another calculation that really isn't relevant to anything here, but and they do factor in on an annual basis, the sales do. But when the assessor is valuing a property, they're really looking back 3 years into their sales ratio study, which is going to consider those. And again, there's a lot of complicated data and math behind these, but that's really it. So 24 sales will impact 25 assessments, but they'll also impact 26 assessments, and going forward.
because of the look back. That makes sense. Yeah. Rosanna DeFrenza asks, can you help explain proration?
Oh, sure. That's a great one. Prorations are because we pay taxes in arrears in Illinois. So when right now those tax bills that just came out are for 2023. If we are selling or buying a property in 2024, we are, as the seller, responsible for the 2024 tax bill, or at least a portion of it, as well as the 23 tax bill. Any closings that happened prior to yesterday would have been based on a 2020 would have been based on the 2022 tax bill. So we're estimating in 2024 based on a tax bill in 2022. So we take that, we add that percentage in, and we calculate out what we estimate for the sake of finality, those taxes to be. And then we prorate to the day. So that's just today's like, uh, oh, I'm sorry, Claudia. I'm going to just try to move my microphone a little and see if I keep it closer to my mouth, if that helps it not fade in and out. Um, so, but that being said, the taxes are reprorated, and so it's just really a calculation of we're in a leap year, so there's 366 days this year, and we calculate, what day of the year it is. I think yesterday was day 177 or something like that. So we just do the math. We take that old tax bill, we add whatever agreed upon proration percent was decided, so 10%, 25, whatever it is, add that in, multiply by the day through today, and divide by the number of days in the year.
All right. Thank you. That works. All right. I'm gonna try this. I think I actually know that I've talked, but we'll go with Phoenicia Joe asks. I think I did that one right. What are the best practices for appealing property taxes if writing an offer can a buyer request more than 105%? I know we've kind of talked about appealing the property taxes a little bit, and we have it kind of addressed, that you could go to 110. I think the other question really becomes like in one of those situations, and I want to kind of dive a little deeper in this if I could, Ryan. So in that situation that we were talking about, where the first bill was $2,000, and then the second bill, let's say now we're writing an offer today on a Cook County property, and yesterday the second bill came out, it was $6,000. So our proration really needs to just match whatever that bill is. Now, I guess it's a twofold question, right? Prior to, if we knew the assessments were going up, we didn't have the bill. Are we able to ask for 115, 120? That's
Absolutely.
probably the better question.
So I I have helped I help a lot of attorneys that do real estate and don't deal with taxes when things get complicated like this, and I guide them on what sort of assessments they should aim for, proration percentages. But yeah, absolutely. I had a client who had a property that was so so underassessed compared to market value. We talked about reassessment, what had happened, etc. They argued and negotiated a 200% proration. That can happen. Absolutely. If you see assessments that change so much, their assessment on a property had increased by 135%, something like that, and so,
Ooh.
which more than doubled. And so they negotiated at a value of, I think it was 200%. The seller agreed to it, and they ended up getting that. When the tax bill came out, they were within 1%, which was just, I mean, obviously it was to my amazing math and not a pure coincidence, but they ended up getting that. But really, whenever you see those significant assessment jumps, you really do have to consider, and there's a way you can kind of calculate that. And again, with that one, their whole township had increased between 30 and 50%, and they had increased 135% themselves. And I said, look, you're never going to get 135%, but there's a pretty good argument to say, okay, if everyone increased this much, maybe we ask for this. And we ended up asking for that 200%, ended up being near perfect, worked out very well for that client. But that's really what you do is you look at your assessment increase compared to what that is, what the neighborhood did, and maybe try to negotiate something in there. In the case there you mentioned where the tax bills come out, if there's a closing this week, the 7.0 contract specifically says the most recently ascertainable tax bill. So any closings that happened starting yesterday on forward should be looking at the 2023 tax bill. So they may have negotiated 105% or whatever and not notice the tax increase. But when that tax comes out, that seller is fully responsible for that second installment bill, whatever it is, and then you can prorate based on that. And so this week, I can guarantee you there are any closings happening today, tomorrow, the rest of this week. There's going to be a lot of changes at the table on those tax prorations.
Yeah. You know what? And that's a great tip for the agents now. Obviously, if you're representing any buyers from now through the end of the month, even next month, that those contracts were written beforehand, now would be a good time to talk to the attorney and say, hey, by the way, can you check the bill, see how our prorations match up, and talk about a great service you as the agent could be providing for the buyer. It's huge. And by the way, on the mic thing, Ryan, I did get more feedback in the Q&A that it has definitely helped. So
Good.
yeah,
I'm
you're
going to
good to
keep it
hold with
like this, and I'm going to keep trying to, I'm actually trying to bend this and see if I can get it to stay.
Yeah, sorry. I know it's probably a little awkward, but I got a little more feedback. All right.
No, this is good.
Becky had mentioned, so I read Becky's question twice. It was funny. And as I read it, I was like, this sounds like one of those asking for a friend type things, meaning that this is probably something that's actually going on or has happened. So I'll read it to you here, Ryan. The total square footage affects the assessed value. How is the tax assessed when the homeowners finish the basement and doesn't report it, then decides to sell the property? So apparently we must have illegally finished our basements. So what I'm picking up here.
You mean like how everyone does?
Very similar to how everyone does, yes. Then the appraiser for the bank appraises the property. Will there be a chance that the finished basement will be reported to the assessor's office and the property taxes will be increased for the next owner? So I'm going to speak to what the appraisers would do as it related to the assessor, and then I'll let you kind of opine on the rest of that. The appraisals of anything that happens within that loan is extremely confidential, and nobody gets the right to any of that documentation without a subpoena. Like literally somebody has to subpoena us to say, hey, we would like a copy of this document. So the fact that the appraiser, and again, the appraiser's now provided it to the lender and it's going to be provided to the buyer, nobody else outside of those two folks has access to it unless they subpoena, which means the county's never going to see it. Ryan, I'll let you finish that answer.
So first thing I want to address is if this works, let me know. If I'm fading, let me know. I tried to bend the microphone. Second thing I wanted to say is the total square footage affects the assessed value. That is correct. I want to clarify that, however, because the total above ground square footage, that is the most important factor to keep in mind there. Below grade square footage, regardless of finish, walkout, etc., lookout, walkout, any type of basement is never included in the above ground square footage ever. Okay. So just keep that in mind. That applies to every county. Important thing, I say that because the finish on the basement is really just a comparison tool. So you have your above grade square footage the assessor is really looking at, and then they try to compare them to other finished, non-finished, walkout, look English, whatever style basement. They try to compare those to similar ones. And keep in mind the other thing, these are market value considerations. The sales price reflects that. This is an arm's length transaction. Whatever the buyer and seller are willing to pay, that's reflective of the value. So it's important to keep in mind as well. If you're buying a property that's assessed at $400,000 and you're paying $300,000 for it, the assessor can't do anything to try to increase the value. If you can show them, hey, I paid 300, that should actually go down, even if they weren't considering the finished basement. Now, more often, they will, they may note that, but in Cook County, at least, the assessor's got way too busy a job to sit there and look at a transaction and note that, oh, the basement is finished. They do try to do that sometimes. They will try to update stuff based on things they see on listings, but that's all they do. They're updating a characteristic. And I think a lot of people kind of overvalue how much that's going to impact it. I mean, obviously, it can in the market, definitely, but on assessments, finished versus unfinished is a consideration, and it certainly plays a value, plays a role, but it is not dollar for dollar what it does in the market. That's just important to consider. And assessors do notice sales that happen, and they will update their characteristics. I've done that when I've submitted appeals using market stuff, and I'll point out to the assessor, this happened in Lake County last year a couple times, where they were like, these are unfinished basements. And I'm like, you should update your characteristics. They're actually all finished basements, just like my clients. And maybe I, called out some other people, but it's really good to actually have those characteristics updated, because then the assessors can actually be fair with what they're doing. But yeah, that happens a lot. Typically, it has a minimal impact, and it's really not the end of the world.
We got another question that came through the Q&A, but it's probably something a little bit for me. Why do lenders base the loan on taxes without tax exemptions when those exemptions might make them qualify? This is a great question. The challenge is not, the challenge is really what Fannie Mae, Freddie Mac, and even FHA is going to do post-closing on that loan. So, one of the reasons that we require all of these things is we want to make sure we have a loan that we can eventually sell to Fannie Mae, Freddie Mac, FHA. And what happens is, what lenders have done in the past is lenders have said, oh, well, that's the tax bill today. Let's go ahead and move our buyers in, when in fact that tax bill was based on a senior freeze, senior exemption. And our buyers clearly, just as you can see on the application, don't qualify for any of these exemptions. So if I, as a lender, close that loan, then what happens is eventually Fannie Mae is going to audit that loan, or Freddie Mac's going to audit that loan, or even if I don't sell it to one of them, let's say I sold it to some other investor, when they look at it, they have the right to come back to us and say, hey guys, you basically put somebody in a home, but you didn't qualify them based on what those taxes really are going to be. And the issue for any lender, whether it's cross country or any lender, is Fannie Mae, Freddie Mac, that investor is going to come back and say, by the way, with the properly assessed taxes, these clients don't qualify. You guys get to buy the loan back. And that becomes a very expensive proposition for the lender, who now has to come out of pocket, take this loan back, and then try to figure out what to do with it, since it clearly didn't qualify for Fannie Mae or Freddie Mac. Now, there's one special exemption to that, and we're going to get into that on the next question we have posted. But if we have a client who is a disabled veteran in the state of Illinois at a rate of 70% or greater, meaning their disability as established by the VA is 70% or greater, in the state of Illinois, they qualify for property tax exemption. Now, real big key with that, it's not a blanket, doesn't matter what they owe. It's just a very large exemption. And I'm going to have Ryan talk about that a little bit. It's a very large exemption, which, by the way, should take care of most properties. But if your veteran happens to own a $2 million property, they will have some state of Illinois taxes, because the exemption only takes care of a certain amount. Now, that
Qualify
all
that.
being
I want to qualify that. That
sure.
actually, that exemption is only a partial exemption in Cook County. Outside of Cook County, if your house is valued above the cap, you get no exemption at all for veterans. Did you know that? Because that
No,
is the truth.
so share that. So, well, wait, let me address this one last thing, and then I
Sure.
want you to get into that. So, a veteran who does qualify for the tax waiver or exemption, getting a VA loan cross country will qualify them with no property taxes. Unfortunately, a VA loan is the only place I can treat future exemptions as part of my qualifying purposes. Anything else, I have to deal with the taxes as they are, or as they will be, assuming that people lose some of the exemptions, because there's non-seniors going into a senior type situation. Now, give me 1 second. Jessica had a follow-up to this. Oh, yeah. So Jessica, we'll get to you in a second. I want to have Ryan cover his statement that he made about the veterans taxes.
So what you mentioned with the veterans with disabilities, if it's over 70% in Cook County, there is a very large exemption that goes up to essentially a house that's around 750,000 or more.
Mhm.
Okay. Now, The reason I said in Cook County is because if you have $1 million house with a disabled veteran above 70%, they'll just send you the remainder tax bill in Cook County. There is a difference. Every other county in Illinois does not do that. Every other county in Illinois, if you have $1 million house and you have a disabled veteran, you get nothing for an exemption. So I actually had a client in Will County who had this very unique situation where they had a house that was worth $790,000 and their neighbor had a house that was worth $690,000. They are both disabled veterans above 70%. One of them had zero tax bill, one of them had an $18,500 tax bill. And then
Ooh.
the wild part, they were trying to ask about how is that fair? And it's actually a ongoing thing that they're trying to resolve because there's no reason for two different counties to interpret the same law differently. So they're trying to clarify that. Maybe something will happen in the next couple years, but that is currently a difference. And that client, I pointed out that the person who his neighbor who was currently getting it is in for a shock in about a year because in 2023 that property was reassessed to $735,000, which means they're right at the edge of that cutoff. And there is a very real possibility that in 2024 that person who has a $0 tax bill will be hit next year with a full $18,500 tax bill because they'll be above that limit and they will lose their exemption. So that is a difference between Cook County and all the collar counties for veterans with significant above 70% disabilities.
So they don't deduct it up to the 700K and start taxing north of that. They just lose the exemption altogether because it's an expensive property.
Yep.
Oh, that's brutal. That's
It
brutal.
is. It is brutal. And it is, like I said, it is a current difference in how the counties handle things. Cook County is the only one who will give them a partial exemption. All the other counties, it is I think, rather ridiculous thing, but it is a ceiling on the value with which their property can be, that they can have. They're basically saying that you're they're telling veterans with significant disabilities you're not allowed to have a house worth more than this amount.
Oh, wow.
Yeah.
All right. Jessica mentioned that lost deals because park forest tax with no exemptions made them not qualify by like $250. Yeah, I get it. Yeah, unfortunately.
The exemptions in park forest, because the tax rate is so high, the way exemptions are calculated, they're a flat equalized assessed value number. And so that number basically fluctuates by the tax rate. City of Chicago, a homeowner's exemption is $700. Park Forest, a homeowner's exemption can be $4,500.
Ooh. Ay, ay, ay.
Yeah.
Okay. All right. Let's see here. So this is good. We kind of talked about that. So Claudia asks, is there a cheat sheet we can use for senior discount, senior freeze, disabled vets? So I think she wants to know like, hey, if we're going into a house, let's say you're bringing seniors into a house in Huntley, right? So they got Del Webb out there.
Mm-hmm.
So how does she try to tell them in that county or Cook County or whatever what their discount would be? Disabled vet, we've kind of already addressed a little bit. The senior freeze, I have an answer for that, but I'll let you address that too.
I mean, the amount of these exemptions, like I said, varies by tax rate, but the thing to note is they're qualified for a senior exemption if they're above the age of 65. Freezes, you need to live there for a little bit longer. You have to have those exemptions in place. Then the next year, once you've already gotten the senior exemption in the homeowners, then you can qualify for the senior freeze.
And one quick thing about the senior freeze typically has some sort of income restriction.
Not
So
typically. Across the board has an income restriction.
okay, so yeah, so if you're making, is it 80% of the AMI or 50% of the AMI?
$65,000.
Okay, so if your seniors are making more than $65,000 a year, they are not.
Household income. If there's two seniors, two incomes. They count Social Security, pensions, required minimums, etc. It is household income. So the other thing to consider, if there's adult children living with that senior, their income has to be included, technically, uh, on this thing that is also typically self-reported.
So I'm gonna skip ahead just because we've kind of touched on some of these questions, but I do want to talk about Nayeshka Bearden had said, can you explain the assessment process for new construction home or renovation addition? I think that's a great question. Thank you, Nayeshka.
Yeah, so renovation additions are valued with a unique way. Basically, they see how much it essentially changes the characteristics of the property, and then that just moves them in their formula, right? So they have big formulas and data for everything, and they're saying, "Oh, you added 400 square feet." Well, they'll see if that changes your classification. If it doesn't change your classification, then it just increases your square footage of the house. And now, if you pull permits, there's a home improvement exemption automatically applied if you do that. But really, all that does and is factor into, your property's characteristics, and they put that into their data and their calculation. And the other thing to consider with new construction is really, again, same thing. You're looking at the neighborhood, you're looking at the characteristics, they're looking at closed sales, and then on top of that, the age. Obviously, new construction, you're going to only be comparing to other new construction or the 1, 2, 3 year old houses. That's kind of how that works. And new construction can be wild because the cost to construct is typically, depends on the market, but it can be more than, what it might sell for a year or two later. Sometimes much less. You can build a house with equity. You can put a lot of high-end finishes and stuff, and maybe, you build a house and it costs more than it might be assessed or sell for. But really, the assessor looks at and puts those properties into, and the biggest thing, into their sales study, and sees what it, pops out. And with new construction, age is that huge consideration. And with the additions, it really just changes that square footage, or it can change the classification of the property, which means it enters a new comparable pool. You can add a second floor to your house, and suddenly you go from a 1-story classification to a 2-story, and square footage obviously changes. But there's no like specific, oh, we're going to add A, B, or C. It's just, okay, you've changed your property. We have new factors to consider in our calculation.
All right, so we've got a couple questions Dahlia and Claire asked that are more CPA questions. I think when we threw tax in there, that a CPA, those I'm going to reach back out to you ladies and find out if you need to connect with a CPA. There is a question in here that's kind of interesting that we'll touch on, which is, please explain the differences between an accountant, a tax attorney, and a real estate tax attorney.
Well, I can start off by saying, as a real estate tax attorney, I focus on your property taxes, and that's pretty much it. So, property taxes, and property taxes, exemptions, things like that. But that's pretty much all I focus on. And there is some overlap between a CPA and a tax attorney. Typically on the planning side, they both can offer advice and guidance as to planning for, minimizing taxes. But then a tax attorney will help you deal with any issues you're having, lawsuits, would deal with the IRS, stuff like that. They'll deal with state of Illinois, deal with the IRS, deal with that. They can represent you if you're being sued, and help you amend, fix, work out, file, and actually trudge through like lawsuits and stuff like that. And again, oftentimes tax attorneys are used for guidance, planning, and minimizing tax burdens in the future. And CPAs obviously can do a lot of that as well. Some of them can even finally, they can help you as well, and they can also obviously, they can file your returns.
So let's see here. I'm gonna go to Basil's question. I'm gonna try to get three more questions in here, Ryan, before we close out. Basil says, you argue the prop. You argue. I'm assuming he's talking about you. You argue the property's value. You win the case, but then there's an increase in the equalization factor. What would you do to lower? And I'm not sure because our question kind of petered out there. I don't know if he just ran out of
So he
care.
might have been asking, can you lower the equalization factor?
Oh,
And
okay.
it just to address that, no. So the
Can,
equalization
can,
factor.
can you back up a second? Because let everybody, what is an equalization factor?
All right. So the equalization factor is really a big old math problem. There is a certain ratio that the
God bless you.
sorry, thank you. Is a certain ratio that the assessor has to meet. The assessments have to be a certain ratio based on the sales that happened compared to their assessments. And there's this thing they have, it's a big math problem to meet. The equalization factor in Cook County is set to make that math problem work. Okay. It's set after all appeals are finalized. All right. So you have in Cook County literally no way to impact that. Okay. It is a math problem set by statute. And what that does is achieve their desired goal of having the properties reach a certain percentage of the market value of the recent transactions. Okay. And so you can't impact that. But there, like, even if you lower the taxes, the equalization factor does not respond to your property. So if you lower your assessment, you have saved money, period. The
Yeah.
equalization factor doesn't, they don't like spitefully say, oh, you lowered your assessment, we're going to increase this. No, if you didn't lower your assessment, they're still going to increase the equal. They're going to do whatever they were going to do anyway, because your assessment in that pool of in that math problem is such an infinitesimal part of it, it makes no bearing on the calculation. And so um, they are so distinct. Now, outside of Cook County, equalization factors 99% of the time are simply one. So you multiply by one, nothing really changes.
Oh, yeah.
And that's really what it is most of the time outside, because they apply an equalization factor on an annual basis outside of Cook County. And they basically equalize everyone's assessments every single year to try to make it so the equalization factor for the county remains one. So again, those are things that happen on the township or county level that you can typically have no say in. And the lower your assessment is, the lower your tax bill will be.
Okay. Seema asks, love this question. We got one quick one after that, but these will be the last two. Seema asks, easiest process for buyers to dive into for applying exemptions as soon as they purchase. I think every agent should know this too. It's a great question.
It is. So, important thing to note, exemptions are based on who lived on that property on January 1st of the tax year. You purchase a house in 2024. The current bill that we just published is based on who lived there January 1st, 2023, which is the seller or nobody. And so you can't apply for exemptions. I mean, you can, just nothing happens. And then in 2025, the same thing. 2025 taxes are based on January 1st, 2024. So next year you go to apply and they'll say, okay, thank you for your application. We've considered it. It does not matter. You did not live there January 1st. So 2026 comes and then they're looking at the 2025 exemption. So if you bought in 2024, that's the first time you, as an owner who bought in 2024, is in early 2026 is when you can apply for those exemptions. It
Wow.
is not a quick process. Outside of Cook County, it is handled so much differently. It is to the point of they don't really have nearly as many exemption issues. But outside of Cook County, just as a note, there's no going backwards. Can't you can't get refunds almost ever, and certainly not for past year tax years. Sometimes for the current year you're on, you can.
So in Ryan in DuPage County, I bought the house this year. Can I apply this year or am I still waiting until 2026?
You should still actually have the exemption from the seller. If there was one, it should still be there. And otherwise, you can DuPage County honestly might apply a prorated exemption. They're like I said, the counties are outside of Cook, everything is so much different. If you notice that the home exemption is blank, call them and say, hey, I lived there for this time. But if you bought in 23 and you lived there for half of the year, call them and see if you're not getting the exemption. Will you give me half the exemption? They might
That's
do it.
cool. That's cool. All right, last we've got what is the starting fee for tax appeal? They're going
Well,
to use your service.
with me, I don't charge anything up front. I don't charge if I lose. I'm a purely contingency based attorney. So if I if I win, I charge. If I don't win, there is no charge. If there is no case, there is no charge. And that happens. Sometimes there's just no case to be made. And that's kind of actually why I don't charge up front. Some other attorneys do the opposite and they charge up front because there's a lot of stuff they have to sift through before they can actually find appeals worth taking. And so, yeah, for me, I don't charge up front. I charge typically 35% of the first year, 30% in Cook County, 35% in the other counties. That's the way I work. And I charge based on the first year's savings. In Cook County, if you get a reduction, it lasts for the rest of the triennial most of the time. And in the collar counties, the same thing applies. Sometimes it doesn't. There's all sorts of reasons behind that, but generally speaking. And so, yeah, if anyone wants to start an appeal, they can reach out to me. I'm happy to sign them up. I do not charge, and I pronounce my name Shafkus.
There you go. All right, Ryan, hang on. We do have one drop in the Q&A. Let's see.
I just answered
Oh,
that.
there you go. Very nice. All right, good. Dorina, that's awesome. Thanks, Dorina. So, all right. So that is going to wrap this up. We're going to talk about some things we're doing in July. We've got a lot of exciting things going on. Ryan, thank you as always. Ryan's contact information will be in the chat. I know Tony will drop that in there again. We do have some really exciting stuff coming up for you guys in July. July, we're going to be live on July 19th. We have a program that starts at 9 a.m., but you guys can come at 8 o'clock because we're going to buy you breakfast. So registration's 8 to 9. Program will kick off at 9. We've got Rick Ruby coming in from the core training. He's going to be training agents on how to get warm leads. And then we're going to have some other speakers on stage for you guys. I expect the event to start at 9, wrap up probably somewhere between 11 and 12. It's going to be all about helping you guys build your business. We're going to have some vendors there. We're going to have some food there. It's going to be great. We were out at Blue Sky last January and just had a great event. It's a great auditorium type setting. So we love that. Our next Zoom class, then, I guess it's on our lunch and learn based on the time, will be Understanding Non-QM Program. I'm going to rename that because I don't like the name of that. Basically, what it means for you guys is programs that are outside of the norm, i.e., bank statement programs, investor loan programs. We're going to talk about all those kind of unique programs to catch the clients that don't qualify traditionally. That's going to be on July 24th. Also, that evening, we'll be having a little after hours at Linford Winery. So that one's almost sold out. So if you like wine and you like Linford, you want to come hang with us, come check out that. Lori, thank you very much for your sponsorship. As always bringing you guys great resources. Best home warranty person, period, right there. And Ryan, again, agents should be leaning on you when they see these tax bills for any assistance they can get. Thank you, guys. One last thing. None of this happens without Tony. So I wanted to thank you, Tony, for helping us get this all put together. Outstanding job. Thank you guys all for attending. And if I don't talk to you, have a happy 4th of July. But I will be talking to you to get you invited to the 19th. Bye, guys.
Bye, guys.